Welcome to our deep dive today. We're going to be taking a look at Stanton House's Private Equity Senior Finance Salary Guide 2025.
Ooh, very nice.
And before you think,
Salary guide.
this is just a boring list of salary bands,
Yeah.
let me tell you, it's not.
Yeah.
This guide is packed with insights,
Okay.
specifically for senior finance professionals and the CFOs
Right.
looking to hire them
Okay. Got it.
within the exciting world of private equity.
Yes. So what makes this guide so fascinating is that Stanton House,
Go.
they're a leading recruitment consultancy and they specialize in private equity.
Yeah.
And they've gone beyond just crunching numbers.
Okay,
They've analyzed the market, identified key trends,
right?
and provided some really actionable advice on navigating this competitive landscape.
So it's like a roadmap to success
Exactly.
for anyone looking to make it big
Yeah.
in PE finance.
Yeah.
And speaking of navigating the landscape, let's talk about 2024.
Okay. Yeah.
It was a roller coaster year, wasn't it?
It was.
Exit values plummeted,
Yeah.
but buyouts surged.
Yeah.
What was behind that strange dynamic?
Yeah, so we had exit values dropping by a significant 71%
Okay.
compared to the second half of 2023.
Wow.
But buyouts actually increased by 59%.
Really?
Yeah.
Interesting.
So it seemed that smaller deals were really in the spotlight
Okay.
whilst those mega exits were cooling down.
Right.
And this, combined with the sort of lingering effects of those high interest rates
Sure.
and inflation, really put the pressure on CFOs.
Makes sense. So CFOs suddenly needed to become experts
Yeah.
in securing favorable financing,
Yeah,
managing cash flow in a very uncertain environment.
exactly.
Really put their skills to the test.
Yeah.
But what about the outlook for 2025?
So the guide points towards cautious optimism for deal making in 2025
Okay.
as the market seems to be stabilizing,
Mm-hmm.
but there are always curveballs.
Always.
And one of those is the UK's decision to increase national insurance contributions.
Right.
And this adds another layer of complexity for those PE-backed companies
Yeah.
because it directly impacts their employment costs.
So finance teams need to be extra sharp,
Definitely.
managing budgets, making sure those rising costs
Yeah.
don't derail growth plans. Now let's move beyond the immediate market conditions
Okay.
and look at some of the bigger trends
Yeah.
shaping senior finance roles in private equity.
So one of the most prominent trends highlighted in the guide is the increasing demand for transactional expertise.
Yep.
Private equity is heavily focused on growth through mergers and acquisitions.
Right.
So professionals with strong due diligence, integration, and even restructuring experience are highly sought after.
That makes sense.
Yeah.
If you're going to be advising on acquisitions
Yeah.
or managing the integration of newly acquired companies,
Yep.
you need a very specific skill set.
Absolutely.
The guide specifically mentions financial controllers, finance directors, and of course, CFOs needing to be M&A savvy.
Exactly. So these professionals need to understand those intricacies of leveraged buyouts and be able to ensure a smooth transition post-acquisition.
Okay.
They also need to be able to think strategically about how these acquisitions fit into the overall growth strategy of the portfolio company.
So it's not just about crunching numbers anymore.
It's not, no.
It's about understanding the strategic implications of financial decisions.
Yeah.
And speaking of strategic, the guide emphasizes how the CFO role itself
Yes.
is evolving into a true leadership position.
Absolutely. It's no longer just about managing the books.
Right.
CFOs are now expected to drive value creation,
Okay.
work closely with PE sponsors, and really influence the direction of that portfolio company.
Right.
They need to be able to translate financial data into actionable insights
Okay.
and communicate effectively with both internal and external stakeholders.
So it's a much broader role, requiring a wider range of skills
Yeah.
and experience.
Sure.
But let's get specific which particular roles are red hot in the PE space right now.
So as we've discussed, financial controllers, finance directors, and CFOs are all in high demand.
Okay.
But beyond the job title, it's those specific skills that set candidates apart.
Right.
So things like financial modeling expertise, restructuring experience,
Okay.
and a strong grasp of investor relations, they're all highly valued in the current market.
I imagine strong communication skills
Oh, absolutely.
are more critical than ever.
Yeah.
Especially when it comes to investor relations.
Yeah.
Yeah. CFOs need to be able to articulate the company's financial performance and strategy in a clear and compelling way to investors.
Definitely.
That's no easy feat.
Not at all. And let's not forget about exit planning and IPO readiness.
Okay, yeah.
These are crucial aspects of that private equity life cycle, and the guide stresses the importance of CFOs and corporate finance teams in maximizing valuations and navigating that complex world of tax implications.
Taxes, always a joy.
They are, aren't they?
And the guide mentions recent changes to capital gains tax rates.
Yes.
I imagine those are adding another layer of complexity
Definitely.
to those exit strategies.
Yeah.
How are CFOs adapting to those changes?
Well, they need to be even more meticulous in their planning, ensuring that asset disposals are structured in a tax-efficient way to optimize returns. CFOs now need to have a deep understanding, not just of corporate finance, but also tax law and its impact on deal structuring.
It sounds like a very demanding role.
It is.
With a constantly expanding scope of responsibilities.
Yeah.
And this is where it gets even more interesting.
Okay.
The guide points out that attracting and retaining global talent has become more challenging with the abolition of the UK's non-dom tax regime.
Right. So this change means that long-term UK residents, regardless of their domicile status, are now taxed on their worldwide income and gains. So PE firms need to be more creative with compensation packages to ensure they remain competitive in that global talent market.
It seems like compensation is a crucial piece of the puzzle.
Oh, absolutely.
In this competitive landscape. And before we move on to the nitty-gritty of salaries, I'm curious about the impact of different sectors. The guide briefly mentions how the priorities for finance professionals can vary between, say, tech-focused companies and those in more industrial sectors. Can you elaborate on that?
Yeah, absolutely. So the guide highlights how CFOs in tech-focused, PE-backed companies, they're all about scaling operations quickly and efficiently. So if you take a fast-growing software firm, for example, their CFO is going to be laser-focused on managing the company's burn rate.
Securing that funding to fuel growth. And building a financial infrastructure that can handle rapid expansion.
So it's all about speed and agility in the tech world.
It is,
What about industrial sectors?
So CFOs in industrial sectors, like manufacturing, for example, they tend to prioritize cost control, ensuring the resilience of their supply chains and managing working capital effectively.
So it's a different kind of challenge compared to the high growth, high burn environment of the tech sector.
Absolutely.
It's fascinating how the same role can require such different skill sets depending on the industry.
For sure.
But let's get to the heart of the guide.
Let's do it.
The salary tables themselves. Now, we've already established this isn't your typical salary guide.
No.
It has a unique structure that makes it much more informative.
Can you explain how it's organized?
So Stanton House has categorized the guide based on company size and broken it down into small cap, mid cap, and large cap. And this allows you, as the listener, to quickly identify where you fit in and understand the corresponding salary ranges for your level of experience and the size of the company that you're targeting.
It's like a customized view of the salary landscape.
It is.
So let's walk our listeners through some of those key roles and their associated salary ranges.
Great.
We'll start with the CFO, of course.
Okay, so for a CFO in a small cap PE-backed company, typically with revenue under 50 million and an enterprise value below 100 million. The base salary range is typically between 150,000 pounds and 180,000 pounds. But remember, this is just the base.
We need to factor in bonuses, equity, potentially other benefits as well. I imagine those can vary significantly. Depending on the company's performance and the CFO's individual contribution.
Absolutely. And the guide provides those detailed insights into how those bonus and equity structures are typically designed.
Nice.
It also includes valuable information on day rates for interim positions, which is incredibly useful both for companies looking for that short-term financial expertise, but also for freelance professionals who are looking to benchmark their rates.
So it's a comprehensive resource for anyone involved in senior finance within the private equity space.
It is.
But it's important to remember that the guide is just a starting point.
It is, yeah.
Your actual earning potential depends on a variety of factors, including your experience, your skills, and of course your negotiation skills.
Oh, negotiation, that's a key aspect that often gets overlooked.
Yeah.
It's not just about accepting the first offer that comes your way. It's about understanding your worth, showcasing your unique value proposition to the company, and confidently advocating for yourself during that negotiation process.
Okay, so we've talked about market trends, key roles. We've even touched on the art of negotiation.
We have.
But let's get down to what PE-backed companies are really looking for when hiring for senior finance roles. What are those must-have qualities that go beyond the resume bullet points?
So from our experience working with PE firms and candidates, there are several key traits that consistently stand out. First and foremost, they're looking for a blend of strategic financial skills and operational experience. It's not enough to just understand the numbers. You need to know how those numbers translate into real-world business decisions and how to navigate the unique dynamics of that PE-backed environment.
So it's about being more than just a numbers person.
More than just a numbers person, yeah.
You need to be a strategic partner.
Absolutely.
Who can contribute to the overall growth and success of the company.
Absolutely. And adaptability is another crucial trait. That PE landscape is constantly changing. So you need to be able to think on your feet, adjust to new situations, and thrive in a fast-paced environment.
And what about leadership style? Is there a particular type of leader that PE firms gravitate towards?
So we found that PE firms tend to favor leaders who are collaborative, decisive, and results-oriented. They need to be able to build strong relationships with their teams, make tough decisions under pressure, and deliver on their commitments.
So it's a combination of hard skills, soft skills, and a certain mindset that makes for a successful leader in the PE world.
Absolutely.
And speaking of real-world examples, the guide features the story of Will Wadsworth.
Oh, yeah.
He was the CFO of Netomnia and Ufiber.
Yes.
And his experience is a great illustration of the skills that are highly valued in this sector.
So Will successfully raised over £1 billion in just 4 years.
Wow.
Showcasing his exceptional fundraising skills and expertise in navigating those complexities of the capital markets. It's a testament to the crucial role finance professionals play in securing the resources necessary to fuel growth in PE-backed companies.
It's a great example of how finance and operations are intertwined in this industry. Now, before we move on to the fascinating topic of equity compensation, I have to emphasize the importance of networking in private equity.
Oh, you're absolutely right. Networking is everything in this industry.
It is.
Building relationships, attending industry events, and leveraging platforms like LinkedIn are essential for uncovering those hidden opportunities that don't always make it to the job boards.
And this is where a firm like Stanton can be incredibly valuable.
They can, yeah.
They've spent years cultivating relationships with leading PE firms and have a deep understanding of the talent needs and dynamics of this industry.
They really do.
It's like having a secret weapon in your job search arsenal.
Absolutely.
We've covered a lot of ground up.
We have.
Market trends, key roles, salary ranges, the must-have qualities for success, the importance of networking. But there's one crucial aspect of compensation in private equity that we haven't touched on yet.
Which is?
Equity.
Equity,
And that's a whole other world, isn't it?
It is. Equity compensation in private equity can be a game changer. But it's also complex and often misunderstood. So we need to break down those different components, like carried interest and co-investment opportunities and how they vary based on your role and your career stage.
And let's not forget about those essential terms that can make your head spin. Vesting schedules.
Oh, yeah.
Ownership dilution. and exit rights.
Yeah, those are important.
Understanding these concepts is key to making informed decisions and negotiating effectively.
Absolutely. So we need to demystify these terms.
Yeah.
Provide some clear examples and empower you, the listener, to navigate this critical aspect of PE compensation.
But it's not always straightforward.
It's not.
There are different types of equity.
Yeah.
And understanding how they work is crucial for anyone considering a career in PE finance.
Yeah, the guide does a great job of breaking down these various components.
Okay.
So let's start with one that you've probably heard of, carried interest.
Okay.
It's often considered the holy grail of private equity compensation.
Okay.
But what exactly is it?
Yeah, it sounds a bit mysterious.
It does.
Like something whispered in the back rooms of exclusive clubs.
Yeah.
Can you demystify it for us?
So carried interest in simple terms is a share of the profits that a private equity firm earns from their investments.
Okay.
Think of it as a performance-based bonus.
Okay.
But instead of getting cash, you're getting a slice of the pie.
Right.
You know, a piece of the upside when those investments are eventually sold or go public.
So if the PE firm does well, its investment professionals, including those in senior finance roles, get to share in that success.
They do.
But how is that slice of the pie determined?
So it varies, and the guide goes into some detail on this. So the percentage of carried interest you receive depends on several factors, including the size of the fund, the performance of the investments, and of course your seniority within the firm. So senior partners and those who bring in major deals typically command a larger share.
Makes sense. The more value you bring to the table, the bigger your potential reward.
Exactly.
But what about those who aren't at that partner level yet?
Yeah.
Do they still have opportunities to participate in carried interest?
Absolutely. So the guide highlights how even junior professionals in PE finance often have opportunities to earn carried interest. Although the percentages might be smaller. It's a way for firms to incentivize and reward strong performance at all levels.
So it's not just about the bigwigs at the top.
No, it's not.
Everyone has the potential to benefit from the firm's success.
Yeah, for sure.
Now let's move on to another intriguing aspect of equity compensation.
Yeah.
Co-investment opportunities.
Yeah.
What exactly are those?
So co-investment opportunities allow you as an individual to invest your own money alongside the private equity firm in their portfolio companies. It's a chance to leverage your insider knowledge and potentially amplify your returns.
So it sounds like a way to double down on your belief in the companies that the firm is investing in.
Yeah.
But it also sounds risky.
It can be.
You're putting your own capital on the line. What are the pros and cons that the guide highlights?
You're right. There's always a risk involved in any investment.
Of course.
But co-investment opportunities in private equity can offer some really significant upside potential. If the portfolio company performs well, your investment could generate some really substantial returns. However, the guide does emphasize the importance of carefully evaluating the risks involved. And not investing more than you can afford to lose.
So it's about finding the right balance between risk and potential reward.
Yeah.
Now, we've talked about carried interest and co-investment opportunities.
Yeah.
But the guide stresses that there's more to the equity puzzle.
There is more. We need to delve into things like vesting schedules, ownership dilution, and exit rights. These concepts can have a big impact on the actual value of your equity stake.
Yeah, those terms can sound intimidating.
They can.
Can we break them down and make them a little less scary?
You can absolutely. So let's start with vesting schedule. A vesting schedule essentially determines when you actually gain full ownership of the equity that's been granted to you. It's not like you receive it all up front. Typically, equity vests over a period of several years, and it's often subject to certain conditions.
So it's a way for firms to incentivize employees to stay with the company and contribute to its long-term success.
Absolutely. So the most common condition for vesting is continued employment. If you leave the company before your equity fully vests, you might forfeit portion or all of it. There might also be performance-based vesting conditions. So like hitting certain financial targets or achieving specific milestones.
So it's not just about showing up.
It's not.
You need to deliver results to fully earn your equity stake.
Absolutely.
Now, what about ownership Dilution.
Dilution.
I've heard that term thrown around.
Yeah.
But I'm not entirely sure what it means.
So dilution happens when the percentage ownership of existing shareholders decreases.
Okay.
Because the company issues new shares.
Okay.
And this can occur when a company raises additional funding or goes public.
Okay.
Or even offers equity to new employees.
So even though the company's value might be increasing, your ownership percentage shrinks.
Yep.
As more shares are issued.
It does.
Diluting your stake.
Exactly. And it's a crucial factor to consider when negotiating equity compensation in private equity. You need to understand how potential dilution could impact the value of your shares down the line.
That's a great point. It's not just about the initial percentage that you're offered.
No, it's not.
It's about how that percentage might change over time.
Yeah, over time.
Now let's move on to the last term.
Okay.
Exit rights.
Exit rights, yeah.
What are those all about?
So exit rights define how and when equity holders can realize their investment.
Okay.
In other words, when and how they can cash out their shares and convert them into actual profits.
So this is where those potential paper gains turn into cold, hard cash.
Exactly.
But how does that typically work in private equity?
So the most common exit strategies in private equity are things like initial public offerings, IPOs, mergers and acquisitions, or secondary buyouts.
Okay.
So when one of these events occur, equity holders have the opportunity to sell their shares, hopefully at a profit.
So you're essentially waiting for the company to hit a significant milestone.
Yeah.
That allows you to sell your shares.
Absolutely.
But are there any restrictions on when and how you can sell?
Often there are. There can be lockup periods that prevent you from selling your shares. Immediately after an IPO, for example. And certain investors or the PE firm itself might have priority when it comes to selling their shares.
So it's not always as simple as just selling your shares on the open market.
No, it's not.
There can be specific rules and agreements in place.
There can.
It's all starting to sound very complex.
It can be, but the guide does a great job of simplifying these concepts. And providing those clear examples. And remember, it's always a good idea to ask questions if anything is unclear.
Of course.
And if you're dealing with a significant amount of equity, to consult with a financial advisor who specializes in this area.
Sound advice.
Yeah.
Now, before we move on to how CFO compensation specifically is structured, I want to circle back to those UK budget changes that we mentioned earlier. That increase in capital gains tax on carried interest. How is that impacting compensation structures in private equity?
That's a key question, and the guide does touch on this. That tax hike has definitely made carried interest a bit less attractive for some deal makers. So PE firms are exploring some alternative ways to incentivize their employees. Whether it's offering a higher base salary or structuring equity compensation in a way that minimizes that tax burden.
So it's a bit of a moving target.
It is.
As firms adapt to this new tax landscape.
It
seems like staying informed and understanding the intricacies of these tax implications is crucial.
Crucial.
For both PE firms and the finance professionals that they hire.
Absolutely. Knowledge is power in this industry.
Yes.
Now let's shift our focus to a specific role, the CFO. The guide provides a detailed breakdown of CFO compensation in portfolio companies, and it highlights some interesting differences based on company size.
I noticed that it seems like the role and responsibilities of a CFO can vary.
It can.
Quite a bit, depending on whether they're working in a small, mid-size or large PE-backed company.
That's right.
So the guide breaks it down into those three categories, small cap, mid cap, and large cap. And the compensation structures differ significantly.
They do.
Between them. So let's start with the small cap CFO. So in a small cap PE-backed company, what does the typical CFO role entail?
So in a small cap environment, which is usually defined as a company with revenue under 50 million pounds and an enterprise value under 100 million, the CFO often plays a very hands-on role. They're involved in the day-to-day operations and wear many hats.
So it's a roll up your sleeves, get things done kind of position.
Absolutely. They're responsible for everything from managing cash flow and financial reporting
to implementing financial controls and supporting the CEO in making those strategic decisions.
It sounds like a challenging but rewarding role.
It is.
Especially for someone who enjoys being in the thick of the action.
Absolutely.
What about their compensation?
So the guide indicates that the base salary range for a small cap CFO is typically between 150,000 pounds and 180,000 pounds.
Yeah, okay.
But as we mentioned earlier, the base salary is just one piece of the puzzle.
Right, we need to factor in bonuses and equity.
Bonuses and equity.
And I imagine those can be quite substantial.
They can.
In a small cap environment where the CFO's impact is more direct and immediate.
Yeah, you're absolutely right. Bonuses for small cap CFOs are often very significant.
Okay.
Ranging from 20% to 50% of their base salary.
Wow.
Depending on the company's performance and the individual's contribution.
So it's a high-pressure, high-reward scenario.
It is.
Where your performance is directly tied to your compensation.
Yeah.
What about equity? Yeah.
Do small-cap CFOs typically receive equity stakes?
They do, but it tends to be more modest compared to their counterparts in larger companies.
Right.
The guide suggests that equity for small cap CFOs is typically in the range of 0.5% to 1.5% of the company.
Okay.
Yeah.
Still, that could translate into a significant payout.
It could.
If the company exits successfully.
Yeah.
Whether through an IPO or acquisition.
Yeah, for sure.
Now let's move up the ladder.
Okay.
To the mid-cap CFO.
Mid-cap?
How does their role differ from that of a small-cap CFO?
So as a company grows and transitions into that mid-cap range, typically with a revenue between 50 million and 500 million, and an enterprise value between 100 million and 500 million, the CFO's role becomes more strategic.
Okay, so they're less involved in the day-to-day and more focused on the bigger picture.
Exactly. They're responsible for things like scaling the business, driving that financial performance, managing the capital structure.
Right.
And they might even be involved in fundraising and acquisitions.
So it sounds like a challenging and exciting role.
Yeah.
Requiring a different set of skills and experience compared to the small-cap CFO.
Yeah.
What about their compensation?
So the base salary range for a mid-cap CFO, according to the guide, is typically between 180,000 pounds to 250,000 pounds.
Okay.
Reflecting those increased responsibilities and the complexity of the role.
Okay, so a noticeable step up from the small cap level.
Yeah.
What about bonuses and equity?
So bonuses for mid-cap CFOs are usually tied to company growth or those exit milestones.
Okay.
And they can range from 30% to 70% of their base salary.
So their compensation is closely aligned with company success.
It is.
And what about their equity stake?
So mid-cap CFOs typically receive a more substantial equity stake than their small cap counterparts, usually around 1% to 3% of the company.
So they're starting to get a more significant piece of the ownership pie.
They are.
Now let's move on to the big leagues. The large cap CFO.
Large cap.
What does their compensation package look like?
So in a large cap PE-backed company, which is defined as one with revenue exceeding 500 million and an enterprise value exceeding 500 million.
Okay.
The CFO is primarily focused on strategic decision-making, financial structuring, and high-level transactions, things like IPOs, mergers, and acquisitions.
So they're at the top of the finance food chain,
they are.
Operating at a very strategic level.
Exactly. They're managing large finance teams, interacting with investors and boards.
Right.
And their decisions have a major impact on the company's direction.
Yeah, it sounds like a demanding...
It is.
But incredibly rewarding role.
Yeah.
What kind of compensation do they command?
So the base salary for a large cap CFO, according to the guide, starts at 250,000 pounds.
Okay.
And can go much higher, depending on the company's size and the CFO's experience and track record.
Right. So we're talking serious money here.
We are.
What about bonuses and equity?
Yeah.
I imagine those are a significant part.
They are.
Of their compensation package.
Absolutely. Bonuses for large cap CFOs can be substantial.
Okay.
Often exceeding 100% of their base salary.
Wow.
And they're typically tied to the company's overall financial performance and the successful execution of major transactions.
So their compensation is directly linked to the value they create for the company.
Absolutely.
What about equity?
So large cap CFOs often receive substantial equity stakes, typically in the range of 3% to 5% or more.
Okay.
And this aligns their interests with those of the PE firm and incentivizes them to drive the company's growth and profitability.
Wow, that's a huge potential upside.
It is.
It's clear that CFO compensation in private equity is highly dependent on company size. Small cap CFOs are more hands-on.
They are.
Receive higher bonuses and have smaller equity stakes, while large cap CFOs have a more strategic focus.
They do.
Receive substantial bonuses and have significant equity stakes.
They do. It's a good gig if you can get it.
It is.
But it's important to remember that these are just general guidelines.
Sure.
The actual compensation for a CFO will depend on a multitude of factors, including the specific company, the CFO's experience,
of course,
and their negotiation skills.
Good point. Now, I want to touch on a specific challenge that the guide highlights. The impact of the 20% family business tax on succession planning in family-owned portfolio companies.
Yeah, that's interesting.
Can you explain what that's all about?
Of course. So the 20% family business tax is a relatively new tax in the UK. And it can have significant implications for family-owned businesses, especially those backed by private equity. Essentially, when a family-owned business is sold or transferred to the next generation, this tax can really eat into the proceeds, potentially making it much more difficult for family members to inherit the business or even forcing them to sell off assets to cover that tax liability.
So it's a real concern.
It is.
For family-owned businesses and their PE backers.
Definitely. How does this impact the role of the CFO?
Yeah. How does this impact the role of the CFO?
Well, CFOs in family-owned portfolio companies need to be acutely aware of this tax and its potential implications. They need to work closely with the family and the PE firm to develop strategies to mitigate the impact of the tax. This might involve restructuring the ownership of the business, exploring some different exit strategies, or even implementing tax-efficient estate planning techniques.
So it adds another layer of complexity to the CFO role.
It does.
Requiring them to be not only financially savvy, but also knowledgeable about tax law and estate planning.
Absolutely. It's a great example of how the role of the CFO is constantly evolving. And how they need to stay ahead of the curve to navigate that ever-changing landscape of private equity.
Okay, we've covered a lot of ground on CFO compensation.
We have.
But let's shift our focus back to the guide as a whole. What are some of the key takeaways that our listeners should remember?
Well, first and foremost, the guide is an incredibly valuable resource for anyone who's interested in a career in private equity finance. It provides a comprehensive overview of the market, the key roles, the skills in demand, and those compensation structures. It's truly a roadmap to success in this field.
And another key takeaway is that the private equity industry is incredibly dynamic. And constantly evolving.
Absolutely.
CFOs and other senior finance professionals need to be adaptable. Strategic thinkers. And they need to stay ahead of the curve. When it comes to tax laws, regulations, and market trends.
Absolutely. And let's not forget the importance of resilience.
Yeah.
This industry is not for the faint of heart.
No.
You're going to face challenges, setbacks, and long hours.
Yeah.
But if you're passionate about finance and you thrive in a fast-paced, high-stakes environment,
right,
private equity can be an incredibly rewarding career path.
Passion is definitely key.
Yeah.
It's what fuels you to push through those tough times and celebrate the victories.
Yeah, for sure. And speaking of fueling success, the guide emphasizes the importance of networking in private equity.
Right.
Networking is absolutely crucial in this industry.
It is.
It's a relationship-driven business.
Yeah.
And building connections with the right people can open doors to opportunities that you might not otherwise find.
So attend industry events, connect with people on LinkedIn.
Yeah.
Reach out to mentors.
Yeah.
Build relationships with recruiters who specialize in private equity.
Yeah.
Don't be afraid to put yourself out there and make those connections.
Absolutely. And remember, Stanton House is an excellent resource for anyone looking to break into private equity or advance their career in this field. They have a deep understanding of the market, strong relationships with leading PE firms, and a team of experienced recruiters who can provide valuable guidance and support.
It's like having a trusted advisor in your corner.
Yeah. It is.
Helping you navigate the complexities of this industry.
Absolutely.
We've talked about the market trends,
the
key roles, the compensation structures, the challenges and rewards of a career in private equity finance. But what's the one piece of advice that you would give to our listeners who are considering this path?
I think the most important thing is to be truly passionate about finance.
Okay.
This industry is demanding. It requires a lot of hard work and dedication. And it's not always glamorous.
No.
But if you genuinely enjoy finance and thrive in a fast-paced, intellectually stimulating environment, then private equity can be an incredibly rewarding and fulfilling career path.
Yeah, I wholeheartedly agree.
Yeah.
Passion is what fuels you.
It is.
What keeps you going when the going gets tough.
Yeah.
And it's what makes the journey truly rewarding.
It does.
Even when you face those inevitable setbacks.
Absolutely well said. And remember, continuous learning is essential in this field.
Okay.
The world of private equity is constantly evolving. So stay curious, read industry publications, attend conferences, and never stop learning and growing.
That's great advice. And one final thought for me.
Okay.
Don't underestimate the power of mentorship.
Oh, yeah.
Find someone who's been there and done that in the PE world. Someone who can offer guidance, support, and a different perspective.
Yeah.
A good mentor can be invaluable in helping you navigate the challenges and make smarter career decisions.
That's a fantastic point. Mentorship can provide insights and perspectives that you might not gain from just reading books or articles. It's about learning from the experiences of those who've already walked the path that you're aspiring to travel.
But there's one more crucial aspect we need to explore, the cultural side of private equity.
The cultural side, yeah, absolutely. While those technical skills and financial acumen are essential, understanding the cultural nuances of private equity is equally important for anyone looking to succeed in this industry. It's a unique environment with its own set of expectations and norms.
So what are some of those cultural nuances that the guide highlights? What should our listeners be aware of?
So private equity has a reputation for being very fast-paced, results-oriented, and highly demanding. You need to be comfortable working under pressure, meeting tight deadlines, and making those decisions quickly, sometimes with limited information.
Yeah, it sounds like it's not for the faint of heart.
It's not.
You need to be able to thrive.
You do.
In a high-stakes environment where the pace is relentless.
And it's not just about individual performance either.
Okay.
There's a strong emphasis on collaboration and teamwork.
Okay.
You'll be working closely with investors, portfolio company management, and other advisors. So strong communication skills and the ability to build those relationships and influence others are essential.
So it's not enough to just be a brilliant financial mind.
It's not.
You need to be able to work effectively with people. Build consensus and navigate those complex relationships.
Absolutely. And it's also important to understand the dynamics between the PE firm and its portfolio companies. The PE firm is ultimately the investor, and they have a vested interest in seeing those portfolio companies succeed. So you need to be able to navigate that relationship. Balance those sometimes competing interests. And effectively communicate with both sides.
It sounds like a delicate balancing act.
It is.
Requiring a combination of diplomacy, financial expertise, and strategic thinking.
Absolutely. But that's also what makes private equity so dynamic and engaging. You're constantly challenged to think strategically, make those sound financial decisions, and find creative solutions to complex problems.
So let's say someone is listening to this deep dive. And they're intrigued by the world of private equity. What advice would you give them? Based on the insights in the guide.
Well, the first piece of advice I would give is to really do your research. Thoroughly understand the industry, the different types of PE firms out there, the strategies they employ, and the specific roles that are available.
So don't just jump in blindly.
Don't jump in blindly.
Take the time to learn about the different players and the intricacies of that PE landscape.
Exactly. And as we said before, networking is crucial. Attend those industry events. Connect with people on LinkedIn. Reach out to those working in PE firms that interest you. And maybe even consider working with a recruiter that specializes in private equity.
Yeah.
Like
yeah.
Stanton House.
Like Stanton House. Yeah, building those relationships can open doors.
They can.
And provide those valuable insights that you wouldn't get from just reading articles or attending webinars.
Absolutely. And of course, don't neglect those technical skills.
Yeah.
Solid financial modeling skills are essential.
Okay.
As is experience in M&A due diligence and financial reporting.
And the guide emphasizes that operational experience is becoming increasingly valuable in private equity.
PE firms are looking for finance professionals who not only understand the numbers, but they also have a grasp of how businesses operate in the real world.
Yeah. So any experience that you can gain in operational roles, even if it's outside of finance, can be a really significant asset.
So don't be afraid to step outside of your comfort zone.
Don't be afraid.
And gain experience in different areas of the business. It might just give you a competitive edge.
It could.
In the PE world.
Yeah, absolutely. And one final piece of advice.
Okay.
Be prepared to work hard.
Yeah.
Private equity is a demanding industry, but it can also be incredibly rewarding, both financially and intellectually.
Yeah.
If you're really passionate about finance and you're willing to put in the effort, you can achieve great things in this field.
It's all about finding that balance between challenge and reward.
Yeah. It is.
Now, before we wrap up this deep dive, I think it's important to step back and remember why this industry exists in the first place.
Yeah.
Private equity plays a significant role in the global economy.
It does. It does.
Doesn't it? Yeah. PE firms provide capital, expertise, and strategic guidance to businesses of all sizes.
Okay.
You know, from small startups to large multinational corporations.
And that investment and expertise can have a real impact.
Yeah.
It can help companies innovate, expand into new markets, create jobs, and drive that economic growth.
Absolutely. And whilst the financial returns are certainly a motivating factor, you know, it's important to remember that private equity is not just about making money. It's about building businesses, creating opportunities, and making a positive impact on the economy as a whole.
Well said.
Yeah.
So as we wrap up this final part of our deep dive, I want to leave our listeners with this thought.
Okay.
Whether you're a seasoned finance professional or just starting your career, private equity is an industry worth exploring.
It is.
It's challenging, it's dynamic, it's constantly evolving.
Yeah.
And it offers those opportunities for growth, learning, and making a real difference.
Absolutely. Couldn't agree more. If you're looking for a career that will push you to your limits and reward you for your efforts, private equity might just be the perfect fit.
And remember, if you're interested in learning more about private equity or exploring potential career opportunities, Stanton House is an excellent resource.
They are.
Their expertise and connections in the industry are invaluable.
Absolutely. They can provide that guidance, the support, and help you navigate the complexities of this exciting and rewarding field.
All right, folks, that concludes our deep dive into Stanton House's Private Equity Senior Finance Salary Guide 2025.
Great stuff.
We hope you found this exploration insightful and informative.
Yeah, hope you enjoyed it.
Remember, knowledge is power.
Yes.
Especially in the dynamic world of private equity finance.
It is.
Stay curious, stay informed,
and
never stop learning.
Thanks for joining us.
Thanks for listening.